impact, as I've been.
Is this a problem that you're facing as well? Guys, recently in my Discord group, I've had somebody mention this actually in regards to the FX impact. They've added up. Shout out to them. They know themselves. But yeah, shout out to Singnam anyways. I believe it was Singnam. But yeah, they mentioned that the FX impact is adding up considerably. You know, it's quite a bit when you add up all your stocks, because, you know, it's outside of the UK and whatnot. So we're watching this, and I'm sure Paul is going to be revealing his portfolio as well. It's going to be the first time, I believe, on this channel watching some of Paul's content. So I'm looking forward to it, because the value should be insane. I'm telling you, man. So the guy seems like he brings that fire with him of the value. So I'm definitely excited to watch and see what we can learn from this. So with all of that being said, be sure to watch the video from the beginning till the end to help out with watch time on this YouTube channel. But with that being said, YouTube is Ronnie MP. Whoop!
It's RonnieMP.com.
Want to join my free gift card giveaway? Subscribe to the channel, like the video, and turn on the notification. Then let me know that you subscribe down below. That's it. Hey yo, what's good? You know who it is. It's your boy Ronnie MP. Thank you and welcome to a brand new video of It's Ronnie MP, the show where we're bringing guys a bunch of videos suggested by you guys, and guess who? You guys only. So if you're brand new to the channel, then be sure to absolutely destroy it. Like, when I say destroy, I mean destroy that like button right now. Just stop what you're doing and smash that like button. It only takes a few seconds. Same thing with the subscribe button. It only takes a few seconds, but a few seconds of your time goes such a long way for the YouTube algorithm. So, you know, honestly, just be sure to do it, because it honestly does help out. Okay, but if you're brand new, then welcome to the channel. On this channel, as I mentioned in the past as well, we talk about finance, helping you save and everything finance related that's going to help either keep your money in your pocket or bring more to your pocket. So hence to why you want to subscribe. And we make daily videos as well. Let's not forget, we make daily content. So it's hard, but we get it done anyways. All right, so if you're new, you could definitely consider subscribing. So Paul, yeah, so this links hence to why I picked this topic. It really does link with some of the conversation that we had with our private Discord. If you want to join the Discord, link is down in the description so you can join the Discord group. But hence to why I decided to choose it, because it's about FX impact. Look at the title of it. The title says FX impact. By the way, if you haven't already, go subscribe to Paul, just as we've done. And then let me zoom out for you guys right there. Okay, subscribe to Paul just as we've done. Smash that subscribe button as well as that like button, even though we haven't watched the video yet. But, you know, we're supporting anyhow. So be sure to do all of the below. But yeah, so like I was telling you guys anyways, it was a discussion in our private Discord group, so we wanted to check it out. Trading 212 once more is the platform that we're going to be talking about, that he's going to also be talking about. And if you want to get started with that, then link is in the description down below. Deposit £1 into the account, you get your free share that's valued up to £100.
It's a portfolio update. So, I'm going to be showing you the good, the bad, and the downright ugly of my portfolio. Also, I'll be answering the question about foreign exchange rates and whether it's a good idea as UK investors to be investing in the US right now.
It's opportunity,
so if you're here
isn't
for
it?
that, just skip on ahead. Welcome back, everyone. My name's Paul. I've recently started investing, and I've started a dividend investment portfolio with Trading 212. Now, I've been giving Trading 212 a bit of a hard time recently because they've had a lot of problems with their customer service. But you might have noticed recently that they've started giving...
Every other free platform seem to have had the same thing, so you can't really blame them too much. But let's see, maybe he might mention that.
Execution problems. There shouldn't really be any order execution problems, but we're learning now that they might not be Trading 212's fault. Interactive Brokers and Robinhood also suffer these problems quite often. And Interactive Brokers' problems seem to be directly affecting Trading 212. But what is nice is that Trading 212 are now delivering messages and notifications to us when this happens. That way people aren't sitting around and just wondering what's happening with their trades.
And I do have to admit that was really helpful because like what I've been doing is if I see that message pop up, then I'm like, I'm not risking it. I'm not buying any shares right now, especially when you're dealing with a stock such as Tesla, when, you know, it's volatile and everything else. So you don't want, when you execute it, there's a massive delay, and then all of a sudden you end up buying it when it's at 700. I know I'm exaggerating, but you get the gist. So we don't want that. So that's quite good on their behalf, you know.
Are sitting around watching my videos every day, but this is most likely the result of thousands and thousands of horrible, abusive messages, and they just wanted to start communicating with their customers a little bit more. No matter what the reason for it, this is of course a step in the right direction for Trading 212. I bet this has cut down the complaints by half. But anyway, my portfolio is sitting at 2242.
Juicy. So look at that. Look at that.
Amount of money.
22.
I've never seen this amount of money. This is a lot of money to me, and I don't know where it's come from. The green number there says I'm sitting at 8.4%. Most likely, real return is 10 to 11% if you include all the dividends reinvested. And I've now only got about 5 companies in the red. My income pie is doing a lot better than my S&P 500 pie, which to me signifies that I'm doing a lot better in my income pie than I am in comparison to the S&P 500. It hasn't always been like that. Often the S&P 500 is doing much better than my income pie. Value and dividend investing is just having a bit of a good time right now. Biggest winners at the moment are Albemarle at 45% up.
So I don't actually know. I'm quite curious now if he holds perhaps any Tesla positions. As you guys will know, that's basically my entire portfolio right now. It's to do with research and strong conviction. So I'm convinced that I'm on the right path, and results will tell. That's one of the things about trading or investing. Sorry, I always often say trading because of Trading 212, but you get the gist. Investing is the results speak for themselves, so you don't have to defend yourself. If the results are there, then people can chat all they want, but when you show them the results of the portfolio, and it's smaller amounts invested than them, but you've got a bigger return, then it's like, yeah. So yeah,
there's a lithium refiner. In fact, anything that revolves around commodities right now is doing pretty well. Royal Dutch Shell is 12% up for me and 23% up on the month. And also, as usual, Rio Tinto is doing very well at 37%. I do eventually want to do a video on miners, but the truth is it's very complicated. That's why I don't have massive positions in companies like Albemarle and Rio Tinto. At base, when you're investing in a company that revolves around a commodity, their share price generally follows the price of that commodity. So for Rio Tinto at the minute, iron ore is doing really, really well. Copper is doing really well as well. So naturally, their price will go up. And it's the same with Royal Dutch Shell. Brent and WTI, which are the two main oil trackers, are now pushing $50. These oil futures have hit these prices 3 years earlier than expected. So you can expect that oil majors are going to do really, really well, at least in the short term. It could now be hitting $60 halfway through next year. That really was not expected, but now it could be looking like a real possibility. Oil is not dead yet. My biggest losers are Digital Realty at 10% down.
I find that so funny how you said yet, because it's like if you don't know, if you don't know now, you know. It's like if you know, you know. If you get what I mean. At
9% down. My buying of Digital Realty should be a lesson to anybody who wants to buy a company at an extremely overvalued rate. Digital Realty is a data center REIT that has some massive tailwinds, but I bought it very, very expensive. But I think this is a good lesson for people to not make the same mistakes that I do. Find a really good price for the stock you want to buy, and then wait until the price comes down to that point.
See, it's gems like that, because it's things like that, and that's why we love doing these videos, and I'm sure that's why a lot of you guys love these videos, and you've commented or you've sent me like private DMs and whatnot, based on who I should, as recommendations basically, right? But the thing about him is, for example, what he just mentioned there with his mistakes, you can learn that and prevent that from happening. Do you see what I mean? Hence the way he said, learn from our mistakes. So it's really good to watch these videos, not only just to watch out on the things that are hype, but to watch maybe the little details, because you never know what you can get out of someone else's errors, and that could prevent your future error from taking place.
I believe in Digital Realty quite a bit, and I'm happy to hold on to this for years and years and just soak up the dividend. I'm pretty sure this company will recoup its losses, and I'm happy holding on to this one for pretty much ever, really. Lennar Corp is one I am a little bit upset with. I'm down 9% now, and I'm not entirely sure why. Lennar is a well undervalued stock. It's trading well below its cash flows and well below its earnings. I figured housing inventory is down, interest rates are really low, people really want to buy houses in the US, What's not to love about this company? But I think I've figured it out today, and I think it's
market
all
so
down
far.
to the stimulus package.
Damn.
If the US stimulus package doesn't come through at a good amount, investors are worried that people won't be able to pay their mortgages and there will be a massive housing crisis again. And Lennar is not only one of the biggest house makers in the US, it also has a lot to do with the mortgages as well. However, this company is trading at such a low price now, I just can't stop buying it. Not advice, obviously,
It's
it's
tempting.
just what I'm doing. But if you look in 2007, 2008 and 2009, Lennar got hit heavily during a housing crash.
You can
It's
see
not
that. That's
predicted to have
insane.
these same problems right now, but we know that the housing market can just fall off the edge of a cliff sometimes. So they're the biggest losing companies on my portfolio right now. But what I've got to say is probably the biggest loser is the US exchange rate. And I had a message from Bradley on Instagram who asks, "Hi Paul, I was wondering, are you worried with the FX impact, as I've been investing in a few American companies for a while like O&T, but they're hitting me bad with the FX impact on Trading 212. Are you having the same problem?" And yeah, I kind of am. It all depends on when you bought. Any stock that's sitting right on the edge for me right now is most likely all being affected by the FX rate. If you have a look at AT&T, I'm down 3.24% on the FX. On Johnson & Johnson, I'm up 5.8%, but down 5.6%. This negative foreign exchange rate is really hurting. If I'd invested in just UK companies, I'd most likely be another 6 to 8% up right now. And the question is now, should we be worried about this? If you don't understand what's going on, you use your Great British Pounds to buy US stocks, but you have to buy them in dollars. So when you buy those assets overseas, you have to convert the strong British pound into the weak US dollar. And there's a ton of things that can change the way currencies move. But today we'll just focus on the ones that are happening right now. People have been saying that the pound is getting much
Good
stronger
old Boris.
because we're getting
Don't you
closer
just
to a
love
Brexit
Boris?
deal. I don't think that's the
Jokes.
case. Economic and political changes can change the way that currencies move, but it's highly unlikely that the pound is getting excessively stronger, and it's more likely that the US dollar is getting temporarily weaker. And the main theory for why the US dollar is getting
Or
weaker right
stimulus.
now is the money printer. The first thing is that the US Federal Reserve has lowered interest rates, which has increased inflation, which has devalued the dollar. But that's nothing compared to the amount of money that has been printed into the economy. And when you add this much money out of thin air into the US economy, it starts to become a
yeah.
game of supply and demand. If you make an object less rare, it becomes less valuable. So if you double the amount of money in your economy,
Inflation.
no one's going to laugh at you if you think that the value of the money is going to go down by half. It doesn't actually lose value by that much, but let's keep it simple. But as with anything in investing, it's all about perspective. If you started buying after March 19th, you could easily be down 14% on all of your investments. And I
Wow.
started buying around April 6th, April 7th. So I could be about 8% down on most of my investments.
Damn, and I started even later than that. So bleeding heck. Hold on, let's even check right now. I can check and tell you guys for Tesla, as some people like to say about Tesla. Yeah, it just bugs me up. Tesla. But okay, cool. So let's see. And I've just got a free share. I'll make a video about it and share it with you guys. Well, let's see. Oh goodness me, we are smashing it with Tesla. Yeah, we're honestly smashing it. But I'll let you guys. We are truly okay. All right. After this, there's a portfolio update that's coming up. But oh my days, FX impact £137, 2.2%. Insane. Like, yeah, not good. But we move.
And if
It
you
is
take a
what
look
it
at
is for
Johnson
now.
& Johnson,
You
I'm
can't do
both
anything
5%
about it.
down and 5% up. This is because I started buying around the 6th and 7th of April. So most of my Johnson & Johnson holdings should already be 6 to 7% down. And this 14% drop has got a lot of Bitcoiners dicks tickling. It's down 14%. Fiat currency is over. Quick, everyone get out and into Bitcoin. And to be fair, Bitcoin and my other cryptocurrencies have done really well. At present on eToro, I'm around 40% up on Bitcoin. Ethereum's doing
snap.
pretty
So he's
well
got-
at 11% up. And I bought a little bit of XRP. I've been over 100% up on XRP. I'm not sure about Ripple. I don't even know too much about these other cryptocurrencies. But I'm happy with a little bit of my spare cash to just wang in a little bit of a hedge.
And
I'm
just
surprised
see
it hasn't
what's gonna
completely
happen.
crashed yet. But it might be because the US dollar hasn't quite recovered yet. If it ever starts to recover properly, then you might start to see a drop in Bitcoin. But like I said, everything with investing comes down to perspective. And if we have a look at the US dollar over time, you'll see that a 14% drop is not that bad. If you had bought a US stock at the bottom of 2008, you would now be up 48% just on exchange rate. It doesn't even matter about the massive bull run that came with it. You'd be 48% up just on FX. And over the past 5 years, we've had plenty of 11, 12, 13% drops. Massive drops in the US currency aren't.
So there's a lot of learning going on here, guys. So hence to why we're paying attention in regards to what Paul is mentioning. And it seems like he's got a wealth of knowledge. Even though he's a beginner, he just started. He obviously started before us. But yeah, man, bloody heck, Paul, mate, you've been doing your bloody research. But which is good, man. It's good to see, and I love the content. Usually, you tell when I love someone's content a lot when I'm quiet or when I'm listening. I'm paying attention. I'm learning. So yeah, but so if you're finding value in this video, smash that like button. So far, absolutely smashing it. From Paul's end, man, bloody heck.
The ordinary.
Love
because
it.
since 2008, the US dollar against the GB pound has been on a tear, and it doesn't look like it's going to stop anytime soon. But how does this affect us as UK investors, and what should we be doing about it?
Kind of sucks,
as always,
especially seeing
depends.
£135.
If you're a big Brexit believer, you
on
might
FX.
think that the GBP is going to get stronger, which would mean that all of your US holdings are going to get a lot weaker. You might, though, just be following the long-term trend of the US dollar, which shows that it's getting stronger and stronger versus the pound. So this 14% drop might just be a buying opportunity for you. You might be getting every
going on
US
sale.
held stock at a 14% discount right now. There is another round of stimulus coming, though. We just don't know how much. If it's another 4 trillion, you might see the US dollar go down another 10, 12, 14%. Again, probably more of a buying opportunity, but we just don't know. There's nothing really normal at all about the US and UK exchange rate. It's heavily manipulated by governments. In the euro, you've got Germany, who would love to profit off a soaring exchange rate, but you've also got Greece in there that really needs exchange rates low. It's so they can look really cheap for US and UK tourists.
Okay.
But I think you can probably see where this is going. It's not something that's well within our control. It's all about your belief on how well you think the US is going to do versus the pound. I think this is a blip for the US dollar, and I think it's going to get a lot stronger probably halfway through next year. So right now for me,
But I think the
buying
pound
at
is
the
still
moment
gonna
on the
remain
US
stronger.
dollar is probably buying at a discount. But nobody knows what's going to happen next.
And
So
that's
your
the
best
scary
bet is to
fact.
probably
People, you just
cost
don't know.
average into everything. The answer probably isn't to buy just UK companies, because any FTSE 100
hell
company
no.
that does a lot of business around the world is going to be affected by these exchange rates. If one of these companies is mining some copper in the US, then it's got to convert it back to pounds.
Yep.
And if the US exchange rate goes up,
Yep.
it loses money.
Yep.
However,
Yep.
if it stays down, it gains money. That's probably why a lot of the UK companies are doing okay right now. However, if the US dollar gets stronger, Brexit goes bad for
Look at
whatever
that.
reason, or the UK has to put in a
Returns.
lot more stimulus,
What
then
was
it's
it,
going to be
UK
bad for
pandemic
US
savings
companies.
bank?
The best thing for me right now is to keep adding to companies that I think will see very good growth. If
Okay.
anything, I'm completely dollar cost averaging into the FX market. I'm continuing to
I
buy
can
all
see
the
why
way
that makes
down,
sense.
and I'm likely to continue buying
For
all
him.
the way up. But it's just as a side product to me buying these good companies. Thank you very much for watching, everyone. The investment app that I use is called Trading212. If you wanted to get into investing,
It was a good insight. It's first time for me to see his portfolio. He obviously didn't go into it one by one, but it was there for, like right now. It's right there in front for everyone to basically see. So 80 shares, 80.9 shares. Base Systems 414. AT&T 800, 200. We've got, I mean, he's doing well. Yeah, the majority of it are in green as well, so which is awesome. We love to see the greens. iShares Global 330 shares. Johnson & Johnson. Yeah, man. Overall, like, nice. I can't even lie. And he's getting some sweet dividends, you see. So that's okay. Whereas for us, we've switched our strategy, as you guys would know. So we're aiming for that growth, and we're looking or seeking for that exponential growth. And I believe we've got the right stock to be able to execute that with the right volatility. So meaning it's gonna be anything but boring. It's gonna be massive ups, massive downs, but I believe overall we are going to Mars, back to Earth, and then like to Jupiter or some next big planet that's yet to be discovered. So yeah, be sure to always be watching and look out for future videos. But to summarize that, I enjoyed the video. There's a wealth of knowledge. You could just tell, you know, and it's really good to see that obviously he does his homework, because it makes the video more engaging, more entertaining, and you feel like you're learning something, you know, rather than you just you get the gist, right? So yeah. But be sure to go over to Paul's channel, show him some love, smash that like button, smash that subscribe button, as we've done so you can stay up to date in some of the content that he releases and whatnot. But the platform that we've mentioned or I've spoken about today, and the one that Paul's talking about, is Trading 212. If you want to get started, all you do is deposit £1 into your account, and Trading 212 will give you a share that is worth up to £100. Okay, but some of you guys have mentioned I haven't received my free share yet. In order for you to receive it, you need to fund the account, meaning you need to deposit at least £1 into the account, and then they'll send you your free share that's valued up to £100. This way you take advantage of free money, you can get started and do whatever you want with it. Okay, so that is Trading 212. All right, and if you want to get started, as I told you guys, link is in the description box down below. Be sure to click on it. But guys, thank you ever so much for watching the video. It was really nice. I mean, I didn't want it to be this long, but it ended up being this long anyways because it was Paul, but not complaining because it was amazing value wise, or absolutely awesome. A good little gems in there. So yeah, really do love it. By watching this video, guys, you did not waste your time. Don't forget to tell your haters to get in line. Discord group also, if you want to join the Discord group, link is in the bio, in the description box, sorry. And be sure to watch this video right there, that video right there. If you enjoyed watching this video, you're definitely gonna love watching those two videos that you see on the side. And then yeah, subscribe button once more is right there. Peace out, much love, bye bye guys.